The broadcast is now starting. All attendees are in listen-only mode.
Okay, so I have a little bit after 11 a.m. Mountain Time, the time for the webinar to start here. My name is Dave Miles. I am the moderator and the presenter today. I've worked at ValuSource for the last 18 years. We put together valuation software, damages software, and some online business valuation software. We cater mostly to the valuation market space. I am a CPA and a certified valuation analyst. I realize today's webinar is mostly for brokers, and I'll get into that in a moment here. I do recognize that there is a big difference between the two. I'm just trying to give you some idea of my credibility here. And over the last 18 years, I am partly responsible for making sure that the data gets published in a way that the market space can use in looking at the data. So I've been familiar with the IBA market data here for, I want to say, the last 6 years, the last 5 or 6 years. Let's get a few pieces of housekeeping out of the way. If you have any questions, feel free to type those into the question panel over there in the GoToWebinar, and I will try to answer those as we go through the presentation. Trying to answer the questions earlier on seems to be easier for me than waiting till the end. I did mention that the handouts are available over there in the handout panel. You're welcome to download those. And at the end of the presentation, I will leave up some contact information. Feel free to reach back to me and ask any questions that don't get answered during the presentation. I like talking to people, and helping others is a good thing for me. Last piece of information is I do a lot of these presentations for people who need continuing professional education. As far as I know, this doesn't count for any of that. We're not taking attendance, and so we can just kind of get that off of the table. And I'm not limited to any time limits here. I'm not sure we'll take a full 45 minutes. Maybe we'll get out of here a little bit sooner than that. So let's go ahead and get started here. First thing I want to do is kind of give a quick overview of what I intend to cover today. I'm going to talk about what is the IBA market data, what's its history, where did it come from, some of the things that you might be able to use it for, and then I'm going to talk about how do you access the data. That's a big question out there. You can't use the data if you can't access it. And then I'm going to give a demonstration of how you actually get to the data, use it, and try to come up with a probable range or a probable selling price. And we'll go from there. Before I do that, I have a question for everyone. If I could get you to answer this question: are you a current user of the IBA market data? This will certainly help me tailor the presentation a little bit, and we'll see how we can go from there. And then we'll get into the presentation, and at the end I'll ask another question here about an offer, a free hands-on offer. If you stick around for that, you can certainly take advantage of that by answering that question. So I'm going to close this poll, and I'm going to tell you that we have a 50-50 split. So half of us are used to the IBA data and half of us are not. And so this is going to be an interesting presentation. I'll have to elaborate on a few pieces of information. So let's talk about the history of the data. Back in 1978, Ray Miles founded the IBA. Now, Ray passed away in 2013, but before he did, I had the opportunity to talk to him, and we went back in our family trees for 4 generations, and there was absolutely no crossover. So the idea that our last names are the same is purely coincidence. It has nothing to do with any kind of familial ancestry going on there. But what I did learn when I talked to Ray is that back in the mid 70s, early 70s, and the 60s is that when people were trying to put prices on businesses, they would use something called a rule of thumb. And I'm sure you're all aware, oh, here's a rule of thumb. A CPA firm transacts at about 1 times revenue. Other places transact at some percentage of revenue plus the inventory. And all of those rules of thumb made sense. But in his mind, what stuck around is this idea of being strong in the marketplace or weak in the marketplace. Now, that's my terminology, and so let me explain it. I live in Pueblo, Colorado, Pueblo West actually, and we have a south side and we have a north side. And so if I had a pizza restaurant that was on the south side and I was comparing that to a pizza restaurant on the north side, and I used the rule of thumb, I would come up to the same probable selling price. Well, the issue with that is that what if we say that there was a lot of qualitative aspects for the restaurant on the south side of town? Let's say that it was 50 years old. Let's say that they had health citations and weren't keeping up with some of that, and some of their customer lists were dropping off. And then let's compare that to the north side, which is a brand new part of town, and so their pies are being there's more of a charge for their pies. The restaurant is brand new and super clean, no health citations. That north side restaurant is a little stronger in the marketplace, and the south side restaurant's a little weaker in the marketplace. And make no judgments here. I'm not trying to say one restaurant's better than the other as far as an investment or as far as a purchase goes. What I am saying is that the price you pay for those should be different because one's stronger in the market space and one's weaker in the market space. So the problem with looking at a rule of thumb is that it would tend to put those two pieces together. So Ray said, let me start collecting some data so that I can help brokers, and I believe it was brokers that he wanted to help first in pricing these businesses so that if they do have a stronger one, they can say, oh, here's where the stronger one would lie at. And if they have a weaker in the market space, they could say, here's where the weaker pricing should be at. It started with about 4 fields and then 10. You can also look up the IBA, the Institute of Business Appraisers, out on the Wikipedia, and they also got into performing valuation services as well. And so this data also flipped over into that space, and that's how I know about it. And I should say right now is that there's a big difference between what a valuator does and what a broker does. And if I have this wrong, you feel free to correct me, but I'm under the impression that a broker has a probable selling price, and they have a real buyer and a real seller, and they're trying to make a transaction happen. And that price is a negotiated price. In the valuation world, where I kind of do my work, is we have a hypothetical buyer and a hypothetical seller, meaning that they're not real and a transaction never takes place. But we have to come up with a value so that somebody can allocate that value to different parties. So if it's a shareholder dispute, we have to have a value so that shareholders can get their proper amounts. If it's marital dissolution, we have to have an amount so the two can trade. But when you're talking about real life transactions, everything changes. And that's the biggest distinction is what that purpose and what that standard of value is really about. And so I'm going to try to keep this on the level of saying, hey, what's the most probable selling price and how does the IBA market data really drive to that most probable selling price? So how do you gain access to the data? The data is accessible over the web, and it's a subscription service. So basically it's a year at a time. And the point I want to emphasize here is that you can submit comps to gain discounts. It takes about 10 comps to get access to the IBA market data for a year. Now, I realize out there that sometimes it's easy to say, oh, let me give you information about the sales transactions that have occurred around me. But a lot of times there's also a confidentiality agreement that gets signed in that process, and so you can't give up the comps. And in that case there, you can purchase this data for $495 for a year subscription. I should also mention that there's 2 competitors to this data. One competitor is BizComps. It's put out by Jack Sanders. Jack came into the marketplace a little bit later. He came into the marketplace in the 90s. Not really talking about BizComps today, but I wanted to mention that. And the other database out there is Pratt Stats. Pratt Stats is put out by bvresources.com, and if you just type in Pratt's Stats, you can go to it. That database was put together mostly for valuators as opposed for brokers, whereas BizComps and IBA Market Data was really tried to put together to determine that most probable selling price. So I didn't really have a slide here to say what's the purpose of this, and you can kind of get to it, and that is that if we collect a whole bunch of comparable sales, and that's why they're called comps, and we analyze those, we should be able to come up with that range. And I say a range because typically when we sit down with sellers and we try to determine what they want to sell this for, you know what I mean, we're looking at a range, we're not looking at a specific price. So let me flip this over to the website. As I said, when you go out to the IBA Market Data, it's a web service. So we log into bvdataworld.com, and then we get access to the IBA Market Data here. And we click on that, and it will launch the IBA Market Data. I have somebody out here making a comment, not necessarily a question. He says a newer comps database is Peer Comps from GFC Financials. And I agree with that. Peer Comps is a newer database. Have not done a lot of work with it. I appreciate you bringing it up. As I understand it, Peer Comps is done mostly with SBA loans. So when a valuation is done, that valuation perspective is added to the Peer Comps database, and it's mostly done on the SBA loan side of things, on the bank loan sides of things. Thanks for bringing that up. I will definitely change up my my ideas here to include that in the future. Thanks. Something I want to say about the data is that there's over 40, well, almost 42,000 records inside of here. So I'm over here on the left-hand side, and I'm looking at this, and I'm saying, okay, I'm looking at the last 10 years, but I can drop this down to all data, and when I press search, the number of records goes up to almost 42,000 records inside of here. And these records go all the way back to 1972, 1974. Another comment on the peer comps is 50-50 between SBA loans and valuations for business brokers. So thanks for that information, and that's where we'll go from there. Thanks again. So there's almost 42,000 records inside of here. And I will say that when I analyzed the database, 43% were cash sales, about 85% of the transactions were for purchases, or the purchase price was $500,000 or less. The average purchase price inside of here was about $930,000, and the median purchase price was about $140,000. So as I look at the numbers, when that average and that median are pretty far apart, that means there's some items in here that are really pulling that price up for the average, but the median is really trying to say, look, this here is for, you know, that business, couple $100,000, $500,000, maybe getting up into that $1 to $2 million purchase price area. There's a little bit inside of here for some of those mid-market deals, but not quite the same as what you might think. You can sort this data. In this case here, it's sorted by SIC code, but we could come over here and sort it by the data sale, and it goes from high to low. And when I do that, I get a different order of transactions. And you can see over here by the data sale what's going on. There's a sales price. One of the limitations of the database is that sometimes there is missing information. And so when there's missing information, you just have to deal with that and decide whether you want to use the information that's there or whether you want to exclude it altogether. So the easiest way to search our database is by SIC code. So if I type in 8021, well, let me do it a little bit differently here and say, okay, if I type in a description, that might come up with things. So if I type in dentist and I press search, I'm going to come up with the 8021, and it's pretty similar. If I type in other information like steel, and I'm going to get back into this as a demonstration here, but if I type in the word steel, I get a whole bunch of different SIC codes. 3441, 1791, 7389, 5051. And my point is that you can use a description or several words inside of the description, or you can use the SIC code. This is a Boolean and description. Let me draw a picture here for what that means is that if I say the SIC code list is over here, and I say the description list is over here, the Venn diagram is going to say, I'm only going to get those records that are inside the overlap, inside of the middle part there. So it's a Boolean and condition. I have to have both of those in place. So let me come over here to the dentist, 8021, press search, and I will show you there's some missing information and there's some information inside of here that is a little bit odd. So we have a selling price of minus 103 and minus 135. Again, you're going to have to look at the limitations of the data and decide, do you want to use that comp or not? Some other items, like in the area of motels, a lot of times motels, the big value of a motel business is the real estate that it's sitting on. And so you'll see millions of dollars for the motel, but you know that the business itself isn't worth all of that much. So did they include real estate? Did they not include real estate? Inventory is another big issue. So if you look at, say, liquor stores, a lot of liquor stores, a lot of the purchase price is the inventory. And a lot of people who are involved in those transactions say, look, I'm not going to pay the broker his 10% for inventory that I could sell pretty much outright. And so they exclude the inventory from the transaction, but somehow it gets wrapped up inside of the sale that's being reported. And so you have to be a little bit careful of what's actually going on inside of this data. What I will say is that the database was presented and used to try to develop that range of pricing that might transact. And so let me come over here and show you what that looks like. If I type in 1791 and I press search, I'm going to come up with steel erection. So as I said, I live in rural Colorado, and putting up steel outbuildings is a big deal. So there's a lot of businesses around me that do that. And so I just am kind of curious. And when I look down the list here, I am looking at all the years, and I can sort by the date of sale. And so my oldest date is 9/7, and as I go down, I believe the nearest date or the oldest date away from me is September 30th, 1998. I can sort this by sales price, and I can go from high to low, and I can get an idea of where I might be. If I have a $1.8 million sale, I might be looking in this area here and saying, do I got comps on both sides? A lot of times I'll get questions on how big does the population have to be? How many comps do you have to look at? And typically, it's going to be 15 or more is where you want that to be at. You can use less if they're tight. And as they're inside of there and they get tight, you can use that information. What really happens is that as the population starts to decrease, the confidence level you have in the pricing that you're developing should go down as well. So if you only have 8 or 10 records inside of here and you're looking at those and you come up with some pricing, you're not going to be as confident as if you had 30 or 40 records inside of here. And each SIC code is a little bit different as to how many are included in the system. I should also say that you only get to download 6 SIC codes at a time. So if I came over here and I typed in space 8021 and pressed search, I would get both of those SIC codes, but I can't download more than 6 at a time. Question out here says, does the IBA data include comps for industries such as software, media, information, data, and companies? The answer is I believe it does, but I have not done a search on any of those particular industries as such. And so you'll have to get in here and look at it yourself. What I will say is at the end of the session here, we're going to offer up a free hands-on experience, and you can certainly get your hands on this, type in those SIC codes, type in those descriptions, and see how many transactions come up. And I should say that these transactions are coming from brokers. As I said, that we offer up, you give us 10 comps, we'll give you free access to the database, and those comps then are put inside of here. And so as brokers submit comps, the database gets more and more, and it just depends on who has submitted what and from what part of the country. Back to the demonstration here, so that we have 3 ways to get this data out. So I've done my search, I got a rough cut up here. This is my data, I can look at it, I can sort it, I can get a good feel for saying, am I looking at the right pieces here? I have another question out here. It says, because the cost of the owner's salary is included in discretionary earnings, do you think the multiple should decrease as the cost of living increases over time? That's a great question, and I would have to think about it a little bit. My answer tends to say is that these pricing multipliers tend to stay the same. So if the cost of living increases and that salary is increasing, you also have to look at the revenue side, and so the revenue would be going up as well. And the offset in the revenue tends to offset the increase in the expenses. So not only is the cost of the owner salary being included in there, but also the cost of goods sold. How much does it cost to develop the product? How much marketing do you do? Other administrative functions, bookkeeping. As all of that goes up, it's going to be offset in the cost of revenue. So I don't believe that I would adjust any of the multipliers for that particular component. Personal opinion. Certainly everything I say you have to vet for yourself. I'm not trying to say I know everything here. That's just where I'm coming from. Okay, 3 ways to get the data out after I've done my rough cut. The first is this button down here that says data. There's one that says analysis, and there's one that says direct market data report. And so when you click on these green X's, we're going to generate an Excel sheet. Inside of that Excel sheet is going to be the data that you're seeing in here, and also all of the fields that are available to see for each particular record. Now, the data only is a sheet that comes out and it has only data on it. And the reason that we would select that is because we don't want to use the macros inside of the workbooks that are to the right of this. The analysis book and the direct market data report both have macros inside of it. Sometimes people can't use those on their machines. For instance, if you have an Apple, I forget what they're called, an Apple book, a Pro book. My kids use them all the time for school, and I'm not a big Apple person, but if you download those, sometimes those macros will not run on the version of Office or the sheets that are inside of there. But you can use the data only to get to the data and build your own models out of them. The analysis workbook is a workbook that does a linear regression, and that's what I'm going to talk about first, because that seems to be the easiest concept to get across to folks. And then the direct market data report is the report Ray Miles came up with that shows, here's the strong ones, here's the weak ones, and how you might be pricing inside of the middle of those. I also need to say that anytime you click on the green X, that counts as a download. So sometimes people say, hey, I only have 3 downloads of BizComps or 7 downloads of BizComps because I bought a different kind of subscription. When you click on the green X, that counts as a download. So let me come back to my workbook. If I had clicked on the analysis button, let's see, that's the analysis. I will lift this up, and Microsoft Excel is the book that we put this into. So obviously it'll drop a file to your computer. If you don't use Excel, you use something else. I've not seen any programs not be able to open an Excel book. Not every program will run the macros and stuff inside of here. So the first thing that we have to do is we have to say, this came from the internet, and Microsoft is saying, be careful, do you really want to edit this? The answer is yes, so I'm going to click on that. The second thing that should happen is we should also get a message to say, look, this here have macros in it. Macros can be bad for your machine. Are you sure you want to run those? Well, because I trust ValuSource and I trust BV Data World, I'm going to say go ahead and enable the content. I know that they're not trying to take over my computer and do malicious things with it. The first tab here just tells you what I just did. It says, here's what's going on, here's all the sheet tabs, and here's how you can get help enabling your macros. The next sheet tab is called Extended Data. This extended data is the same thing as the data sheet. And typically people are only going to look at this area in here, this summary information. If you work your way out to the right, there is more information over there, and it has all of those different fields that are available to you. The next item is the select transactions. So I'm going to get rid of this message box. I'm just going to hit the delete comment. And what this is that this is the list of items that were inside of my rough search. And it automatically goes through and it says, hey, if I'm missing a particular multiplier or a particular piece of data, I'm not going to show those in my selected transactions. I can also come in here and say, look, here's a particular transaction that looks a little bit funny to me. I don't want to use it. So I right click on that and it changes it to false. And those selected transactions then are garnered over here in the selected transaction list. And you can say, this is the list of items that I will use inside of my analysis. We have some tools to make this easier. So say, for instance, I want to sort this by sales, and I want to arrange that from lowest to highest. And then I right click down here, it's going to say sort that transactions. Now, when I only have 15 or 20 transactions on here, it's easy enough to go through and select these transactions, like I just showed you. But if you're trying to look at dentists where there might be 2,700 offices inside of there, it's a little harder to sort those. And so those tools out there will make that easier. But again, you just click the trues and falses and it will use those particular items inside of your selection. Now I'm an accountant. As an accountant, I like to look at data squares. And so these grids of numbers make a lot of sense to me. They don't make sense to a lot of other people, but they make sense to me. So if you like to look at these things, that's great. Real quick, I go into transactions selected here. I say my price to revenue multiplier, the low is 0.24, my high is 1.4, my average is 0.64, and my median is 0.57. I'm feeling comfortable with those ranges. Just basic intuition says 0.24 to 1.4. That's a pretty decent range. I don't have anything that's really wild there. I've seen some of these come up with like 8 or 9 inside of here. I might want to go back and look at that. The price to discretionary earnings, again, 104 to 473. I'm feeling pretty good about that. 234 is my average, 184 is my median. What that means is that there's some in here that have a higher discretionary earnings. And that's pulling the multiplier up a little bit, and so you can see what's going on there. As I said, grids speak to me; they don't speak to other people. And so, what do we do about that? We put in pictures, and this is what I love about the analysis file. I'm skipping over these two sheets here, the subject company and equity value. Those are mostly for valuation folks that are trying to say what's the stock of the company worth as opposed to what the assets of the company are worth. I'm under the impression that most transactions out there happen at an asset transaction. Give me the equipment and the pieces of stuff that I need to generate the cash flows that I'm buying from you. And give me the goodwill that you've earned over the years. And that's kind of what's included in this price. And so I need to sort this a little bit and say what we come up with is a picture here. This is the linear regression line. That's what this red dashed line is. It's simple linear regression, and what that means is it takes all of those data points, here's my price and here's my sales, and it creates a line that has the least amount of difference between each data point and that line. And that's all that this here is doing. And you can go out and you can look up linear regression, simple linear regression, and come up with the same same line and equation over here that we come up with. The R squared number is the idea that as that approaches 1, it means that these numbers are more correlated. And as that approaches 0, it means these numbers are not correlated. And so you have to take a look at that and say, look, am I in a reasonable correlation? Do I have an outlier that's driving any of these prices? You can go back and you can uncheck those in the transactions and see what happens. But the reason I like this is because when you sit down with the seller and he is telling you or she is telling you, look, I have a lot of sweat equity inside of here. You can't tell me that my business is worth $1 million. It's got to be worth at least $1.8 million or $2 million. And you can say, no, these are all the transactions that have happened throughout the last 30 years. And if we come over here and we look at your $1.8 million company and we go up to the line, the most likely price is just going to be a little bit above $1 million. And you can put the actual numbers in the equation and come up exactly what that is. But it's easy to see this. And you're saying, hey, look, your price is up here $2 million. This is where you're at. How come you think you're so much stronger than all of those other companies? Do you have better equipment? Do you have a better customer list? And there might be reasons for trying to get that. But I like the regression line because it's easy to show a seller exactly what other people are paying for a business. And while the seller may want to sell that at $2 million, most people are not going to pay that because in the past they haven't paid that. The other pictures that are inside of here, and these charts are generated automatically after you make that selected items. So you can see price to sales over sales, and you can see price to discretionary earnings, and price to seller discretionary earnings over discretionary earnings. And then we have something called a histogram. And the histogram simply takes all of those sales that we've looked at and puts it into buckets. Having only 15 transactions is probably not very worthwhile, but if you had 2,700 transactions, looking at how many times a particular item occurred in the sales category would give you some comfort to say, look, there's more transactions that occur at this range than at the range you're trying to sell at. So you might have a better time trying to price it at that particular point. That's how the analysis sheet works. And like I said, it's using the linear regression. Let me open up the DMDM report. This is the direct market data method. I'm going to click on the enable editing, and I'm going to click on the enable macros, and I'm not going to, the first tabs are the same. I just want to come back over here to the price to sales chart. So it starts out with a simple scatter plot. The next tab over is where we add a couple of items. We add what I consider the 25th percentile and the 75th percentile. Give me a second here. My technology is working on me. Okay, so we create a line inside of the scatter plot that says, look, about 25% of the businesses are transacting below this level. About 25% of the businesses are transacting above this level, and about 50% of the businesses are in this middle piece here. And so when we're talking to a seller, we can start to say, look, we have a better idea of what a strong company might be, and we have a better idea of what a weak company might be. And if we're somewhere in the middle, we might tend towards up here, we might tend towards down here. We might pick the 75th line and go a little bit above it, a little bit below it. You guys are good at that. Here's where we have to read the seller and read the buyer and say, look, this is where the prices of these businesses are. But the reason I like the DMDM method is because it's not just the middle piece. This gives me the middle 50%, and it gives me an idea of what those are looking like, and I can start to adjust my conversation a little bit and say, look, you think you have a strong business, well, then we're looking at this line up here, and we can do the same thing. I'm sorry, come down here and show you the bottom labels. Say, look, at 101.8 million, let me come over here, and there's my line, and I might get a little bit more than that $1 million for the middle one. And that gives me an idea of where that looks like. The next tab over adds the 10th percentiles on it, the 90th and the 10th. And by looking at the 90th and 10th, now I get to see what I consider are the exceptional transactions. Now, an exception in my mind are like these here are very unique. There's reasons why they would transact in at this level. So if I'm above this line here, I'd be saying, wait a minute, this here is probably more a synergistic type sale. Somebody's trying to get somebody out of business, somebody's trying to corner the market, or maybe that sale was made to an insider, a family member, and they wanted to make it at a really high price for some reason. Same goes for the ones on the bottom down here. There might be reasons for these very low numbers. For instance, somebody didn't sell the holding corporation, they sold the 5 restaurants inside of the holding corporation, but the deal was you had to take all 5 of them, and there may be one that's the oldest restaurant, some bad health citations, not very much revenue because it's the old part of town, not many people go in there, and so you might get that single restaurant down inside of here, and that might be a reason why. But typically, if you're below the 10% or above the 90%, you have to really be asking yourself the question, is this a probable selling price? Because I don't think that it is without having some other information behind it. And so that can really get you some traction when you start to talk to a seller who thinks their sweat equity is worth a lot more than what somebody would pay for it. And you can say, look, 10% of the transactions are above here. There's no way you're going to get money up in this area. And that's a little easier for somebody to see. So that's what I have about the IBA market data. Let me see if I can get back on track here. So this is the contact information, and you're welcome to write that down. What I'm going to do now is kind of summarize what I went through, and then let me ask my last question here, and that is can we contact you about a hands-on experience? Feel free. Obviously, if you put a yes on here, we're going to give you an email or a call. And if you don't put anything on there, we won't. But a lot of times, this is an easy way to make that happen. And then I'll bring that contact list here in a minute. So what I talked about was the IBA market data. Where did this come from? Why is it in existence? Gave you a few statistics about it. We talked about how you access the data. It's a web subscription, and the easiest way to get it is to give 10 comps over to ValuSource, and they will give you free access for a year. And those comps do not have to be current, by the way. They can go back in time. And the next thing we did was we actually did a couple of searches inside of the market data. And so we went out there and we looked at dentists, we looked at steel erecting companies, and we took steel erecting companies and actually said, if I have this data, how would I explain this to a buyer or a seller? And you saw the scatter plots and those charts that were leaving a whole bunch of information inside of this. Say, look, I can put this information on here. I can sit down with this chart. And when I was talking to one broker, this is just a personal experience, is he says he loves to bring up all of that right there on the computer screen in front of somebody. They kind of go through it together, and in 5 minutes they can have this little chart that they're looking at on the computer screen saying, look, this is where most of the pricing occurs at. If we're trying to come up with a probable selling price, this is where we need to be at. So let me bring back my contact information. If you want to talk to Mark about submitting comps and getting access to this database, you go right ahead, call up Mark. If you have any questions about how the IBA data is used or what the definitions are or how that looks, feel free to reach out to me either by phone or email. As I said, I believe in a help others kind of world. If the boat rises, the whole world's a better place, and I love talking about this stuff. So feel free to reach out to me. That's all I have at this time. I will check one more time for questions, and I'm not seeing any. I want to thank you for participating today. I'm right here. Oops. There we go. Now we're back in place. I'll leave this screen up for another 2 or 3 minutes, but I want to sign off here. We're right at 40 minutes, a few minutes earlier than I had anticipated. Thanks again for spending some time with me today. Hopefully you learned something that's helpful and you can take back to your businesses to make your life a little easier. Take care now. Adios.